Hello and welcome to myfinanceteacher.org. Let's have a very brief update today looking at three charts only: DXY, gold and the stock market. Starting with DXY, as I've been talking about this for quite a few weeks already, there was a distinct possibility that the US dollar was ready to go down sharply into an intermediate cycle low. With the low yesterday, we just gently touched the 200-day moving average. The daily cycle might have finished lasting for 55 days. Usually the daily cycles on the US dollar last for around a couple of months, so we're pretty close to an average duration of a short-term daily cycle. Perhaps we'll see a bounce into a new third short-term cycle of the ongoing intermediate cycle. The intermediate cycle is still pretty young at only 111 days, so there is likely going to be a third short-term daily cycle within the ongoing intermediate cycle. But perhaps over the next couple of weeks there might be a bit of a bounce in the dollar, especially that it's bouncing from the support zone of the 200-day moving average. And while the dollar is bouncing for a couple of weeks, that might be a bit detrimental to the gold price. By the way, gold's short-term daily cycle is now 62 days long. Usually these cycles also last for around a couple of months, so it's about to start getting a little bit stretched here. It's not very long yet, but perhaps over the next couple of weeks, maybe a week or so, we might see some softness in gold price. As this zigzag shows over here, I've been expecting some softness for a couple of weeks already. Some short-term softness into the short-term daily cycle low, followed by a rally into the second daily cycle of the ongoing relatively new intermediate cycle. And it's also likely that the dollar strength might also create some difficulties on the general stock market. We see a new intermediate cycle starting in the general stock market from the 13th of October, in mid-October. By the way, while I had previously expected this new rally to be only a short-term bounce followed by stock markets rolling down into a deeper intermediate cycle low compared to mid-October, some of you commenting on YouTube were actually correct with this bounce turning into a new intermediate cycle. So good job on that, and please continue to share your opinion down in the comments below on what we are likely to see on the gold price as well as the general stock market. But back to what I was going to say, with the dollar perhaps strengthening over the next couple of weeks, and with the ongoing short-term daily cycle in the S&P 500 now at 47 days, usually these cycles also last for around a couple of months, it's pretty likely that the S&P will see some resistance from this 200-day moving average. Again, as this zigzag shows, I've been expecting some resistance from the 200-day moving average for about a week already. And over the next couple of weeks, we're likely to come down into a short-term daily cycle low, followed by another push higher into the second daily cycle of a relatively new intermediate cycle in the general stock market. And by the way, looking at it right now, one thing you possibly could notice over here is perhaps a bit of a head and shoulders formation over here. And there is still a high likelihood of a recession taking place. Perhaps now it's been postponed sometime into 2023. And in the meantime though, over the next 2 to 3 weeks, some strength in the US dollar and weakness in the gold as well as the general stock market. For much more on a range of assets, for example, I've recently published this very informative uranium report for November. Feel free to join us at myfinanceteacher.org. Have a nice day. Bye-bye.